Good morning, everyone, and welcome to the Sirius Report. Well, as Western central banks continue to accumulate gold in record amounts, they are starting to move eastward, looking to China as a global market leader. Paul, as always, I want to thank you for being a part of the discussion. And there's a lot of importance to talk about in the Chinese gold markets.
Yeah, absolutely. And it's really important that people realize the influence China's gold markets have over the West and why we have seen this huge, significant price increase since, and not entirely, but if you go back to around October 2023, when gold was at about 1800 at that point in time in dollar terms, and it's recently reached 3,500. Okay, it dipped back, but we're not here to discuss price fluctuations. But there are many factors in play, and why we see still now instances of the gold price rising sharply overnight in terms of European and US time because of physical buying in China, not principally, but not exclusively. But before we get into that, we should discuss the following: that China is the world's largest consumer, producer, and importer of gold. And at the very heart of China's gold market is the Shanghai Gold Exchange, which is the largest physical spot exchange in the world. And that means, and you can't buy this in these size contracts, but if you buy a contract for an ounce of gold, it's backed by a physical ounce of gold. That is not something we can say with any degree of confidence happens in the West, of course. Now, the Shanghai Gold Exchange was established by the Chinese central bank in 2002. It's regulated by the central bank, and it's worth noting in 2014, of all years, the Shanghai Gold Exchange then incorporated the Shanghai International Gold Exchange within the Shanghai Pilot Free Trade Zone, and that created the International Board of the Shanghai Gold Exchange. Now, why am I mentioning all this? It's because the Shanghai Gold International Gold Exchange is the interface through which international investors can trade gold both on the international board and the domestic main board of the Shanghai Gold Exchange using offshore RMB. So this is another example where people say, well, no one's going to trade with China and be in receipt of renminbi. Well, they can be, because then they can go to either of these and buy physical gold and pay using this offshore RMB. Now, this is all enabled through the use of what is termed a free trade account system in the Shanghai Free Trade Zone, where international members and customers have to open one of these FT accounts with one of a number of designated settlement banks, and funds can be remitted between an FT account and overseas accounts, onshore non-residential accounts or other FT accounts. Now, in terms of the Shanghai International Gold Exchange, there are in excess of 100 international members. And this is one example where Western central banks can, in principle, go and buy physical gold from the Chinese. We should also note that gold is bought through the opaque markets, which we've mentioned previously. And I can tell you categorically, and I'm going to say it again, the amount of people in the world who know what these markets are, you can count on the fingers of one hand, apart from the participants. And I'm one of those people because I know the people associated with opaque markets. So we can tell you when there's huge amounts of tonnage being bought and sold in those markets, and you will never see any evidence of that data appearing anywhere ever, whether it's now 10 years ago or 10 years in the future. Okay, something might change at some point in the future, but that is where enormous tonnage is bought and sold between, and it can include, of course, high net worth individuals, it can include institutional buyers or investors, but also it can include sovereign states. There is definite evidence that Western central banks are buying more gold through China than they have done previously. And that strengthens the claim of why China is becoming an international gold trading center. That doesn't mean the likes of you and I can go and buy gold there, but that's not the point, because what retail investors buy is just a mere drop in the ocean. Now, there's no doubt about it, through what you might term the Belt Road Initiative, China has strengthened over a decade cooperation and interconnectivity in gold trading, investing and financing in the Shanghai Gold Exchange together with the Shanghai International Gold Exchange, is striving to become a major dominant player in what you might call a comprehensive gold exchange, where you can do end-to-end trading in precious metals, and Chinese commodity futures markets will utilize the Shanghai International Gold Exchange for establishing rules for international access, which is extremely important. And obviously, notionally, products traded on the Shanghai Gold Exchange and the Shanghai International Gold Exchange are not futures products. They are spot markets. They are physically backed spot markets. There is no paper shenanigans going on in China whatsoever. And I wanted to make these points because the Chinese gold market is extremely important internationally and does have a significant bearing on why we have seen gold prices nearly double since October 2023, precisely because of the enormous amounts of physical trading that is going on in the Shanghai Gold Exchange, and of course gold that's coming into China and by extension into Hong Kong.
Yeah, there's an interesting thing there. A really good point. A lot of the scuttlebutt is being talked about. Well, with the BRICS eventually back their currency in gold, or any of the other, the SCO, the ASEAN. If there is an open international gold market for the biggest economy in all of these different organizations, and you can take yuan, you can take probably even other currencies and use it to buy gold as necessary for your own reserves, etc., then there is really no need in any capacity to have to back a currency with gold when you have the opportunity and the option to go ahead and just simply take your reserves, excess reserves, and buy gold directly from Shanghai Exchange as you see fit. I find it along the lines, the sort of mentality of here in the West, of course, or most places around the world, a bank, or you have a certain amount of wealth in cash, but you don't really do a lot of spending in cash. You do the digital cards, the Visa cards, etc. But you know in the back of your mind that my money is secure, and if I wanted to take it out and have it physically in my hands, I can do that. Same thing goes with you have access to a physical gold market. If a BRICS nation, say India, South Africa, etc., has an excess of yuan and they don't want to carry or hold all that, then they can go to the Shanghai Gold Exchange, exchange the yuan for gold, and they have the diversification and they know that it's protected by another uh, form of money that carries its own weight.
Yeah, absolutely. And with regards to the internationalization of the Shanghai Gold Exchange and China being a dominant player in the world global gold markets, because as usual, everybody always goes on about the West, and the West dominates markets and they don't. And increasingly, they are having less and less of a share of that market. It's worth noting that very recently, the PBOC and other departments are looking at the internationalization of certain product deliveries at the Shanghai Gold Exchange. And tellingly, what a surprise, they want to establish overseas delivery warehouses. So those reports that they've issued this action plan for further enhancing note cross-border financialization, service facilitation in the Shanghai International Finance Center. And this relates to the function of key financial platforms in allocating global resources and high-level preparations for an international financial asset trading platform to create a significant functional plan for allocating global financial resources and facilitating international investors participation note in China financial markets. Now, that supports the Shanghai Gold Exchange in conducting product authorization cooperation note with overseas exchanges, which expands the application of note RMB benchmark prices in note international mainstream markets. It doesn't have to get any more obvious what that means with respect to gold and the Shanghai Gold Exchange. And if you want to internationalize certain product deliveries at the Shanghai Gold Exchange and establish overseas delivery warehouses, how much more obvious does it get that China wants to become a major, potentially the biggest gold exchange to service the world, provide overseas delivery warehouses, because you and I could then order gold from the Shanghai Gold Exchange with ease, and they can facilitate also Chinese RMB benchmark prices in direct competition to the COMEX and the LBMA. Hence why, as we said, this is a clear example of China and their dominating and dominant position it is taking and intends to take in the future with regards to gold markets. Now, that's not a threatening overture, because there will be other countries in the Middle East, Saudi Arabia, for example. There's also Russia, and there'll be countries dotted all over the global south who want to do likewise. But I think initially China wants to set this up to obviously be operational in Western countries, and that is how you make a huge difference and change to global gold markets, because with the Shanghai Gold Exchange, you can guarantee if you have a contract for an ounce, it's backed by an ounce of physical gold. There won't be any paper shenanigans to deal with. And whilst these markets can exist and will exist in the future, they're going to become increasingly less and less relevant as more and more of the gold market shifts to gold centers, and Hong Kong included, Dubai, for example, and eventually the marketplace in the West will become relatively insignificant compared to the position that it's held for a significant period of time. And that's why we're talking about this in the context of gold today, and why the big emphasis is on Chinese markets.
Yeah, it's interesting because if you take a look at the current controllers, or at least in the official capacity, London represented the Industrial Revolution and the control of the monetary system there. Switzerland represents the Bretton Woods, the post-World War II gold markets. And now, of course, we have China representing the multipolar world. And they're not simply going to be the biggest, but they're going to be sort of the conduit that the rest of the multipolar world connects to: Dubai, Hong Kong, Russia, et cetera, et cetera. Now, one thing I thought was funny is I don't know if he really understood the implications of saying it, but President Trump just a few days ago tweeted out that he who owns the most gold rules. So, with that in mind, it's certainly not the United States then that has the right by wealth in regards to that to rule.
No, absolutely not. If that were true, then ahead of the US, even if you believe the US has 8,000 tons, is the Chinese, the Russians, and the Iranians. So good luck with that assessment, Donald. But anyway, Donald says many things, and you have to take it with a bit of a dose of salt. But another point I think worth making, and this is something China's doing currently, and that's they've allocated increased gold import quotas for certain commercial banks. Now, this was in response to huge demand, both from institutional and retail investors in China. Now, typically, what the PBOC will do is it places quota limitations of physical bullion that enters China's gold market, the Shanghai Gold Exchange. But these additional quotas were increased recently because there's a big increase in demand for physical gold. So this is partly, of course, fueled by all the tariff issues, concerns about global or Western financial systems and Western economies. And also, you have to bear in mind this is being buoyed by Chinese demand because of that pilot program that allows Chinese insurance companies to invest in gold as part of an ongoing effort to reallocate asset allocations. And of course, it's also worth noting that inflows to onshore ETFs in China, which are all bullion backed, not are they bullion backed or aren't they? That's driven by retail investors, have been extremely strong. So by providing or increasing quotas, this is part of what the bank does. That's the PBOC on a regular basis. And if commercial banks make demands, they'll look at it and go, okay, that's fair enough. Of course, the PBOC will always go, well, this doesn't reflect our view of the price or anything else, because they have to say that. But of course, they know it does relate to that, but they're not going to say that publicly because they want to have an air of neutrality on this matter. But this is another indication of the enormous demand that's going on in China. And also, China's always buying gold. Even when it says it isn't, it always is. China produces at least 600 metric tons a year, far more than they admit to. And China has enormous gold reserves, well in excess of anything it says, and multiples higher than what the United States claims to have, but has still yet to have the gold audit. I think the Fort Knox story seems to have died a death, but we'll see if it ever rears its head again. But these are just very clear examples of the huge role that China plays. And just because we see this shenanigans still going on in the West, it doesn't really matter. It's kind of irrelevant. It also places into question a lot of ideas that were doing the rounds earlier this year as to why the gold price was rising. People keep thinking and saying they don't know why, and no one apparently knows why the gold price is rising. Well, we've explained it many times. As you get towards true price discovery, when physical markets become a more of a dominant factor in the overall markets, then the price will move to whatever true price discovery is. I'm not going to put a figure on that because I don't know. Nobody knows that. But that's why the price has moved to what it has, because that is more representative of where the price should be based on true physical gold supply and gold demand. Now, this could go considerably higher. It might not do. It doesn't matter as far as I'm concerned. But that's the reason, because the influence of the paper markets is getting more and more diminished. And eventually, when it's totally diminished, then we will get true price discovery, and the price will be whatever it is at that point in time. Okay, the argument can be that it could be different if countries decide to peg the price to some notional value. That would then change the whole playing field of that. That may happen or it may not happen. But for now, things have progressed in the physical markets. It will continue to do so. You can expect huge volatility. So people drawing lines on charts are meaningless and you should just ignore them. And, we're not here to offer financial advice, and we don't. We're not here to tell people to buy anything, gold, silver, or anything else. We're here just to provide the information for educational purposes and to make people be informed about what's happening in reality in gold markets, as opposed to a lot of the fiction we've seen for over a decade with people who don't actually understand the gold markets, and particularly gold markets in the East and what is going on in China, which is principally now the major driver of price, corresponding spot and futures price in the West. And as things stand, will continue to do so in the future.
One of the more fascinating things I've been seeing is obviously we're talking initially here about central banks and central bank accumulation. Obviously, before 1971, after 1933, gold was taken out of the hands of the American people, and it was just simply used in international commerce. But China has really focused intently on making sure that the average person and the retail markets have access to gold, and beyond simply just buying coins at your local coin shop, etc. I saw recently, and I think you have seen this too, and you can comment on it, that there are now vending machines, not just to sell gold like you see in Dubai at some of the transportation hubs, but there is a vending machine where average people can take their gold jewelry. It will determine what carat weight it is. It will melt it down and then instantaneously take the value of the gold at that spot moment and put the money directly into their bank accounts. I mean, if that's not saying that gold is an intricate part of the everyday lives of people, I don't know what is.
Well, yeah, and it also makes gold, physical gold buying and selling, even more accessible to people. And also, it allows that gold to then be accumulated and be sold to other buyers, because that people aren't going to buy little bits of gold as a consequence. That gold will all then be shipped off there to another refiner and end up being melted eventually, probably into gold bars, etc., or maybe gold coins. But it is a way of further creating a very flexible gold market for people. In China, there's also in China, excuse me, where you can have a wallet and you can then buy gold, and then you can very easily buy and sell it with this wallet, and it's very interchangeable and very flexible. So China always makes their gold markets very ease of access for everyone. I mean, if you've got 1.4 billion people and the Chinese interest in gold remains as high as it ever has, and it will do in the future because it's part of their culture, almost part of their DNA. And that's why China is, excuse me, this huge gold market, both domestically and internationally, and why the steps we've highlighted today gives a clear example of what China's intentions are in the future, and why, to coin a phrase, a Chinese senior member of the Politburo, the government effectively, made a very telling but very sort of understated statement by going, gold will be an important part of the financial system in the future. And that was it. Nothing else said. No, nobody to infer anything from that. But, there's clearly intentions as far as China's go now. What that means, the story's changed over the years, so I'm not going to comment on that because what I might have said 10 years ago wouldn't necessarily apply today. And what I say today might not even apply next week or in 6 months' time.
Yeah, the one thing I have noticed about China is they are very good at taking past historical instances and taking the good things out of it while not making the mistake of the past, like say we did in the early 1920s or after World War II, where we had the opportunity to redenominate gold to help get the debts out of the West after World War One, but instead they just decided to keep the price pegged to a certain point. It led to a lot more problems and having an open market where the price is determined by price discovery rather than government fiat determination is something that I think is really going to change the scope of gold being money, being recognized as money, and also how it might integrate in the financial system, as you mentioned, going forward. Any other further comments that you might have, Paul?
No, I think that's a good point for us to stop.
Absolutely. As always, thank you very much for your insight and for all of the information you have regarding your knowledge on this subject.
No, and likewise, and
And to everybody here at the Sirius Report community, thank you for all your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.